Shares of Papa Murphy's have been on a tear this year. I'm joined now by the firm's president and chief executive officer, Ken Calwell from the NASDAQ. Thanks for your time. Good to see you.
Thank you.
Well, you know, investors always want to know, what have you done for me lately? So the first question I have for you is, how do you keep your momentum going?
Well, I'll tell you, it's been really a combination of things. We've been very fortunate with a lot of new product news. We recently launched Gourmet Delight line that's been very popular out there. So a lot of good product news. We've also had some good value news. We have a $5 pizza that's fairly recent to our overall portfolio that's been very excited. And also building stores. We are building across the country. We're now in 38 states, and we'll be building about a little over 110 stores yet this year.
So when we talked to you a couple of months ago, you were hoping to triple U.S. stores to about 4,500. Is that number still on track for you?
Yes, it is. That's exactly our goal, to be at 4,500 stores. We're currently at about 1,470 stores, approaching 1,500, which we will this year, and that's exactly our goal.
Your latest profits topped estimates. Now, looking forward, some of the estimates for this quarter and Q3 are a little less aggressive, but the estimates are for a big jump in Q4. So what's happening in Q4 that analysts are keying in on?
Yeah, I'll tell you, in terms of our building of stores, what we see is that we usually build the highest number of stores always in that third, fourth quarter. Just in terms of working out with the overall cycle of our franchise owners that want to build stores, it typically does peak a little bit more towards the end of the year. But we've got great momentum overall in the overall franchise world. A lot of different folks across the country very interested in the concept as we push really from the Pacific Northwest, which is where our roots are, as we push across the country through the Rocky Mountain states, and now one of our fastest growing areas is the southeast portion of the country in the Midwest.
What are you seeing in terms of some of your input costs, whether it's on the commodity side and also with the labor market tightening? Are you having to pay more when you hire people?
Actually, labor-wise, yes, there is a little bit of an increased cost there, as there is for all chains across the country. But for us, we are predominantly, some of our highest number of stores are in the Pacific Northwest, where we do have in Washington State, Oregon State, California, we have some of the highest minimum wage rates in the country. So if anything, on a relative basis, we don't think that the increase in the overall wage costs will impact us quite as much as it will some of our competitors.
So your bottom line looks good. You're moving forward with expansion. Right now, investors like the stock. It sounds very easy. I'm very curious to know what your worry is as you look out in the future, even when things are going so well from your viewpoint.
Well, thank you. Yeah, I'll tell you, in times of high growth, it's been my experience that those are times you really got to watch things. We are very fortunate right now. We're building stores very quickly across the country. Our comp store sales are very high. We were over 5%. In the first quarter, it came off a fourth quarter, we were over 8%. So really great numbers right now. But when you have that kind of growth, I think it's really important that you stay focused on what got you there. Focus on making sure the quality is continuing to be high, that you make sure you're very focused on your franchise owners and that you're taking good care of them. So I'd say probably our biggest challenge is just maintaining the focus with the high level of growth that we're seeing right now, and we've seen very consistent growth that's almost increased at an increasing rate here in this last year.
What about your franchise owners? Listen, it's probably not going to happen this week that we see interest rates rise, but everyone's saying they will go up eventually. Is there any concern about financing going forward? Increased costs, does it potentially put some franchise owners out of reach?
Well, it is. In any franchise system, you don't like to see interest rates go up. But on the other hand, actually, we've found that we've had a pretty stable level of growth year over year over year, even when there's an economic challenging times or good times. And the reason is that, relatively speaking, amongst the franchise concepts that are options for our franchise owners out there, our cost relatively is much lower than a typical franchise. So you can get into a Papa Murphy's store in the kind of $200,000 to $250,000 range all in. That's very unusual and very low cost, and also a very simple operation. So what we tend to find too is that we tend to be able to build stores in economic upturns or downturns and keep a pretty good consistent growth rate going.
Ken Calwell, thanks for your time.
Thank you.
I'm Rhonda Schaffler for The Street.